Today, one of the biggest challenges for retail investor is not the lack of stock ideas. It's the lack of time to research them properly. Think about it. Every quarter, hundreds of companies declare results. There are annual reports to read, con call transcript to go through, investor presentations to analyze, management guidance to track, and news flowing in every single day. Even if you are a full-time investor like me, there's a lot of work. And if you have a job or business, it's almost impossible to keep up with so much of information. As a result, majority of retail investors lack the right information before investing in a company. They either rely on social media tips or what their friends or colleagues are buying. And I always say that if you do not have right knowledge, you won't be able to build conviction in a company. And if the stock falls by, let's say, 10-20%, you will panic and exit. Or if the stock jumps by, let's say, 30%, you may want to book quick profit even if company has got multifold growth potential. And that's where AI tools can be extremely helpful. You can get all the required information without spending hours. So recently, Groww has launched its AI-powered investing assistant called GR1. Their goal is to simplify investment research for every person so that every investor can make an informed decision. Although it is currently in pilot phase with access to limited users, but soon it will be rolled out to everyone. Now, obviously, it intrigued me. My biggest doubt was, can this GR1 tool really help in getting high quality information within seconds? Or is it just another chatbot with stock market data? So what I did is, I created a set of test scenarios to check how effective is this GR1 tool. So in this video, I'll show you the test cases and the outcome. Towards the end, it will help you decide if it is worth exploring Groww GR1 tool or not. Alright, let's get started. So this is the list of all the test cases that I've created. There are nearly 9 test cases. Let's check them one by one. So first, I want to understand whether this GR1 tool can understand or analyze your portfolio or watch list. So if you are an investor with Groww, can it analyze your portfolio? Or let's say if you have a watch list of potential companies, can it analyze that watch list or not? So basically, if you visit your Groww platform, there's this icon you will find. If you click on that, it will open that page where you can ask questions. Let's first analyze your watch list. So I'll just check the watch list. Let's say you want to understand the breakup, right? So can you give me a breakup of my watch list in terms of large cap, mid cap, small and micro? Now here, one change that I'll do is I'll set the criteria for large cap, mid and small cap. So large cap, I would say anything above 50,000 crore, right? Mid, I would say between 20k to 50k crore. And small, I would say anything between 5k to 20k crore. And micro cap, anything between, let's say, 1k to 5k crore, right? Let's understand the breakup. Alright, so here we have the breakup. There are 71 stocks in my watch list. And if you look at large cap that are more than 50,000 crore, there are 18 stocks. It has identified all those companies. Then mid cap, there are 17 stocks. Then there are small cap where you've got 26 stocks. And finally, there are 9 micro cap companies. So you can see 18, 16, 28. There's a nice breakup it has provided. Now next, I want to know the breakup in terms of sector level. So I'll just write a prompt. Please provide, let's say, sector wise breakup as well. Alright, so here we have the sector wise breakup. There are 12 companies in pharma and biotech space, then 11 in IT and software, followed with 10 in financial services and AMC. So a nice breakup it has provided. And you can see all the details, like within pharma and biotech, I've got names like Divis, Loras, Gland, Kaplan, Markson, Shilpa, Newland. These are part of my watch list. Then IT and software, I've got a list. Then financial. So it gives you good visibility in terms of how has been your portfolio or watch list in terms of various market cap size as well as sector-wise allocation. Now, next important question you want to understand is, out of this list, which companies are, let's say, growing at a fast rate? So let's ask them which companies are growing at a fast rate. Identify companies that are growing at a fast rate. And now that we are in Q1 result season, let's mention it based on Q1 FY27 result season. Alright, so it has provided us with the list of companies that are growing at a fast rate. It includes your Network Technology, Newland Lab, Syrma SGS. Narayan, your revenue growth is high, but PAT growth is low. Again, you need to understand the reason. So you can always ask follow-up question. Then it has got Sona BLW, Unimac Aerospace. Very interesting names. Although I believe that it has missed out on some of the names that have posted excellent numbers. So it is not an exhaustive list, but a good list to actually deep dive further. Right, and of course, since we are in the result season, it is ongoing. So some of the names that are not declared result, that is not published in this list. Now, next, I want to understand companies that have moved up or down. So let's ask, identify top 5 companies that have generated highest return in last 1 month, let's say. So it has provided me the list of top 5 performer from my watch list. Again, please note that you can ask a broader question apart from the watch list also. What are some of the fast growing companies in the Indian stock market at the moment? Here I am assessing my own watch list. So it includes Sona BLW, ASM Technology, Laurus Lab, Shilpa Medicare, Sansera Engineering. Right? Now, next question I want to know is deep dive. Like, can it simplify complex businesses or not? So for example, let's take Syrma SGS, which is that has reported a fantastic set of numbers. Now you want to know what is the business of this company in a simple layman language. So let's type explain Syrma SGS business in simple layman language. Alright, so here we have the response. It says think of Syrma SGS as an electronics kitchen. Very nice analogy. Big brand comes to them with a recipe which is product design. Syrma cooks the dish, that is manufacture the product in their factory. It is called EMS, Electronic Manufacturing Services, right? They also have a second model called ODM, that is Original Design Manufacturing. What kind of product do they make? Like they make auto parts, circuit boards that go inside car light, infotainment system, EV component, medical devices, smart meters, IT hardware, defense, so very diversified kind of EMS player, right? Then who are their customers? It includes blue chip global and Indian companies. Why are they growing fast? Very interesting. So there's one reason, that is China plus one, because a lot of companies want to move out of China and India has become a very strong alternative. Then Europe-India free trade deal, management call it mother of all deals. This 20+ year European presence put them in a strong spot to win more export order. And third is new joint venture with Kaga, which is Japanese company, gives them a foot into Japanese market and better component buying. Apart from that, it has also mentioned certain risks that you must know and basically a summarization. So again, here if you want to deep dive further to understand what exactly they are doing, how they are doing, you can ask follow-up question. So it is very interesting. It is able to provide the simplification of the complex business. Let's take another example. Explain business of Sona BLW in detail. So here we have the breakup of Sona BLW business. It says think of Sona BLW as a specialist part supplier to global auto industry, but with a deliberate bet on electric vehicle. They don't make full cars, they make the critical mechanical and electrical parts that go inside car, especially the parts that make wheel turn. Like it includes differential gear assemblies. Again, you can deep dive to understand what exactly is that. They make traction motors and controllers. Then they make starter motors, railway component, then hydraulic motor controllers and so on. Then where do they sell? You can see the breakup of all the clients as well, right, across geography. Then the EV story. So their battery electric vehicle segment has grown 107% in latest Q1 quarter, right? EV now makes up 44% of automotive revenue. Right, so a very nice bifurcation of all the important information that you need to understand what is happening with the business, what business is all about, what are the growth drivers and so on. So very interesting. Likewise, you can ask any question related to understanding a business. Right, now next I want to understand the growth opportunity. Right, where is the big growth opportunity? So let's ask, identify the top 5 themes or sectors that can create wealth in next 5 to 10 years. There you go. We have the output now. First theme it is saying is advanced manufacturing and electronics. I'm not surprised. This is one of the biggest theme and a lot of EMS companies have already created a lot of wealth and they're still small to mid cap, right? I believe this is one space that can continue to create wealth. There are a lot of opportunity in this space. And what are the companies? Again, it has mentioned the detail, like Indian electronics export crossed 30 billion in FY26. Apple now assembled 15 to 18% of its iPhone in India, right? Some of the key growth driver. Then there are companies that has mentioned. The top one is Sirma SGS. Then it has got Dixon, Keynes. We have been discussing these companies, Dixon, Keynes, for a long time. Also, it has interestingly mentioned Tata Elxsi in this space, which is into your IT domain, not exactly electronics component manufacturer. Apart from that, second theme, it is talking about defense and aerospace. Again, a massive growth theme. What are some interesting companies? HL, BL, Data Pattern, Paras Defense, Unimec Aerospace. I've recently done a video on aerospace companies, so Unimec is part of that. Solar industry, although I believe it has missed some of the companies like Azad Engineering, but it is a good list to understand. Third theme it is saying is AI, data center and digital infra. Again, this is one theme that is making a lot of buzz, a lot of interesting name that has come up in this space. Netweb Technology is there, a massive wealth creator. We have discussed it multiple times in the past. But here it has also mentioned names like Happiest Mind, Persistent. So in my opinion, the output is not 100% clean, but good enough to analyze sectors, themes. Like if you want to deep dive into key players in AI and data center, you can identify. Then fourth theme, it is talking about healthcare, pharma. 100% agree to this theme. There's a lot of potential in healthcare and pharma biotech theme. Again, it has mentioned names like Newland, Narayana, Divis, Syngene, Apollo, Max. Very interesting names. And fifth, it is saying energy transition. That include green energy, EV, power, infra. Again, you can identify names like Sona, BLW, Keynes, and so on and so forth. So these are the 5 themes. Very interesting. Now, let's say you want to understand the value chain, right? So let's say, help me explain the value chain of, let's say, EMS sector in India. Alright, so we have the output. It has provided the complete EMS value chain layer by layer. First layer is raw material and commodity. But here it says mostly China controls 60 to 80% of rare earth processing. And this is India's biggest vulnerability. Then second layer is component and sub-assembly. Here it includes passive components as well as active components. Again, I don't want to deep dive further, but it mentions names like TSMC, Samsung, Intel. It says India has zero chip fabrication at scale right now. Tata's fab in Gujarat is being built and will start processing by FY 27-28. But then it says India's position, 80% of India's electronic component is built is imported. This is why India's electronic trade deficit is so big. Right, so companies entering this layer include Keynes, Tata Semiconductor, Sahastra. So this is listed as of now, Keynes Technology. Third layer it says PCB, printed circuit board, and here it include again a subsidiary of Keynes. Fourth layer is PCB assembly, which is the core EMS activity, and here you can go through the detail. Like if you want to understand every aspect of the sector by layer, you can actually go through it. Here it includes very interesting name. I think this is one layer where Indian companies provide a lot of value. Dixon is there, Sirma is there, Keynes is there, Amber is there. Then you have got layer 5 build box and system integration. 6th layer is original design manufacturing. That includes Sirma, Dixon, Keynes, right? Then 7th is obviously the brand, like your Apple, Samsung. In India is not there. Voltas is there, a few name, but not many. And then layer 8 layer is distribution and aftermarket, right? So very nice breakup of entire EMS theme you got layer by layer. So I think that this GR1 tool has done a great job in understanding the detailed EMS sector layer by layer. Now let's understand 5th test case, which is sector-wise learning. Can it analyze a particular sector and help you understand that sector better? So for example, let's take NBFC sector. So let me identify top KPIs to analyze an NBFC sector. Someone who is new to a particular sector and want to understand how to actually analyze a particular sector, let's say NBFC for that matter, what are the KPIs you should know? So here we have the list of the KPIs that it has provided. It has mentioned 7 KPI bucket, right? Bucket 1 is asset quality KPI, which include gross NPA, net NPA. Again, you can deep dive further to understand what exactly is that, right? Explanation in very simple layman language. What's good, what's not good, how do you calculate it? Then third KPI in asset quality is provision coverage ratio. And then Bucket 2 is your profitability KPI. How do you check the profitability of NBFC? That include your NIM, that is net interest margin, the spread. Again, let me repeat, you can ask follow-up question to deep dive with example, right? So it is up to you how much you want to learn. Then you have got ROA, return on asset, return on equity, very important KPI. Cost to income is again very important. Then you have got growth KPI. How is the loan book growth, AUM growth, how has been the disbursement growth, right? Then fourth is liability and liquidity KPI. So very detailed deep dive into this NBFC sector KPI, and I absolutely loved it. Someone who is new to this field, anything you want to learn, I think you can ask the right question and you can get the right answer. So at the end of the day, everything boils down to what questions you are asking. Now next, I want to understand, can this GR1 tool track the results, read con call for me, summarize it in a simple manner, read the guidance and news as well. So let's say I know that Cinema SGS has completed its con call. Can it help me summarize it? Because these con calls are 20-25 pages transcript, right? So here you get a lot of insight. So let's say Cinema SGS has concluded its Q1 FY27 con call. Please summarize the con call for me. There you go. So it has provided the complete summary of Cinema SGS Q1 27 earning call. It includes who was on the call, including the managing director. Then it has also provided the financial performance. Then it has provided the segment-wise breakup. Then it has provided the order book and business pipeline detail. Like order book is 6,770 crore as of June 26, up from 6,400 crore in March 26. Then it has also provided the export and ODM level detail. Next, it has provided the facility update, balance sheet, and important is key management commentary. Now here, one thing that I did not find is the growth guidance, right? So let's identify what is the growth guidance by the company. Now here we have the data. Revenue growth is 35% plus, that is FY27 guidance, and exceeding prior guidance. So management in the latest con call has said that they will exceed their guidance. FY28 guidance is 30 to 35% or plus organic, and there's PCB upside as well. And EBITDA guidance, they've provided EBITDA margin is there. So you can also model how much growth potential is there. What is the valuation? Again, that is a very important question that you can ask, right? So they're saying that this year we should be not only achieving but exceeding what we guided, that is 35% plus growth for FY27. Next question you can ask is assessment of the technicals, and let's say you want to understand the valuation. How is the technicals and valuations of Cinema SGS? This is just one example. You can ask any question if you want to understand the technicals and the fundamentals. So this is also part of my 7th test case, that is to understand both fundamentals and technicals. Alright, so we have the data now. It has fetched all the latest information. The stock is trading near its 52-week high, provided the market cap as well. So it's a mid to large cap company. I would say mid cap, 27,000 crore. P ratio is 68, which is cheaper than industry. You can always cross check whether the data is right or not. Then industry PE is mentioned and price to book is mentioned and a lot of other details. ROE improving, there's room to grow. And then it has also provided the technical analysis. So RSI is neutral, MACD is positive, bullish momentum, right? So all these technical parameters you can ask. And then you can always ask to conclude, right? And then the question is a PE of 68 justified? So it is saying that Cinema SGS PE is below the industry PE within EMS industry, right? And of course, management are also given the guidance. So they are saying that it is trading at a forward PE of 28 to 30, right? And for FY28, it is at 20 to 22 times forward PE, right? So based on the modeling it has done, based on the guidance management has provided. So definitely, it is a very interesting case. You can, again, not a buy or sell call, but overall, I think the assessment that it has done is quite promising. So here is the conclusion. It says Cinema SGS is technically very strong, although stock has doubled in 1 year, but there's super trend bullishness throughout across parameter. RSI at 52 is the healthiest it can be. On valuation, also it says it looks expensive, but forward P collapses to 28 to 30 in FY27 and 20 to 22 in FY28. So all in all, you get both fundamental assessment in terms of valuation as well as technical assessment in terms of how has been the trend. The next question is, Can it do competitor assessment, right? So let's identify this EMS sector only. Do a comparative assessment of top 4 companies in EMS sector. There you go. So it has provided top 4 companies in EMS sector, Dixon, Syrma, Amber Enterprise and Keynes. It has also provided their market price, market cap, PE, industry PE, price to book, ROE, all of that. Then it has also provided technical assessment side by side. Then it has provided the institution flow and ownership. For example, Keynes has seen institutional exit, Amber has seen FI selling, mutual fund buying. Then if you look at what each company does, very interesting. So Dixon is your largest EMS, PLI leader. It is into mobile, TV, washing machine. And your Syrma SGS is PCB plus mixed tech. It is into auto, consumer electricals, industrial, medtech. Amber is into your room AC, RAC and all of that. Keynes is into aerospace, defense, railway, industrial IoT, right? And again, a lot more details. All in all, it has also provided summary. For example, Dixon is strongest in every quality like ROE, reasonable PE, large scale. Syrma is the best growth story with highest technical momentum and guided forward PE that makes it looks attractive at execution hold. Keynes needs a strong Q1 result on 7th August. So that is on 7th August, you will get a good idea. But then the institutions are exiting. Amber at P of 116 is the hardest to justify at current price. So very nice assessment of competitor comparison. Likewise, you can do for hospital, you can do it for NBFC, you can do it for semiconductor companies or let's say aerospace companies, right? A lot of things that can be done. And finally, let's test the thesis challenge. So for example, let's say I like Sansera Engineering. I want to know the bull and bear case. Give me the bull and bear case. So both positive and negative for the company. Let's understand what data it fetch. Alright, so it has provided a detailed assessment of Sansera Engineering across key metrics, quarterly trend and the revenue growth and all of that. And it has provided the bull case as well as bear case. So what is the bull case? Why Sansera can go higher? ADS, that is aerospace defense semiconductor, is real story. Right, it is growing at a fast rate. Then Goldman Sachs has initiated buy with 4,130 target. That gives a good upside from current level. Then debt destruction is real and underappreciated. So debt to equity has fallen down significantly, which is again good thing. Margin inflection is happening. Export-led auto diversification and a few other factors. Now, what is the bear case? It says P of 67 versus industry P of 38 is a brutal premium. Right, so this is one, I think one very strong bear argument in my opinion, although it's a great company, but valuations are elevated. Then institutional money is exiting, so slight selling by institution, but retail is buying. So this is where your smart money is slightly exiting. Then capex is heavy and free cash flow is thin. Auto sector exposure is cyclical. ADS revenue is still early and lumpy. So although this segment is growing at a fast rate, it is very small part of company's overall business at the moment. And ROE is low for the valuation it commands. So very nice assessment it has done for both bulls and bear. So all in all, I tested all these 9 important questions that came in my mind. I think Groww GR1 has done a brilliant job in terms of breaking down the important information in layman terms, and more importantly, it is able to analyze your portfolio as well. It is able to analyze your watch list as well. And it is definitely able to break down hours of research into few seconds and minutes. Of course, what is the negative? The negative is that you only get the summary. When you read the con call in detail, read the annual report, you get a lot of information and insight which these kind of tools cannot provide. But having said this, I think it is a great tool for someone who is new, want to learn various aspects of investing, want to understand important trends. Where is the growth potential? Why the company is growing? Why? What are the bull case, bear case for a company? Right? All of these things you can do. So overall, my assessment is that Groww has done a brilliant job with this GR1 tool, and it is definitely worth exploring. Now, let me not stress this video further. If you are someone who has explored this GR1 tool, do let me know in the comment how has been your experience. And if you have not explored it, I would definitely suggest exploring it. And if you find this video useful, do share it within your friend circle. I'll see you next video. Till then, take care.